Thanks for joining. Chuck Kinkley here. I want to wrap up my series on farm economics versus using the land for solar use. If you're interested in this, there's some other videos. One video goes at length at the economics of agriculture versus the solar use, executive summary. You can expect the solar rent to be about $1,000 a month, $1,000 per acre per year. You can expect to get agricultural rent of about $200 per acre per year for kind of average productivity Indiana farmland. And you can expect, if you farm your own land, to make $300-400 per acre per year. All those numbers being obviously a lot less than $1,000 per year. So kind of in real estate parlance, let's just say the solar use is the best and highest use of the property. Now, I go through another video 3. It's very interesting. It talks about the different perspectives of why the solar guy's there, the perspective of the farmer, and kind of sets forth a framework for the two to potentially talk to each other, which is important. The bottom line is, executive summary of that, is it's worth the farmer's time to stop and listen to this guy, even though he doesn't know him. And the solar developer should really take the time to walk the farmer through this, because the whole business equation to him is a little unusual. And the second kind of observation of video 3 is opportunity doesn't knock twice. The solar developer's there not because you have land that's more beautiful than anybody else's land, but you have land that has proximity to a transmission line that has power on it, the availability to put power on it. And the availability to put power on that transmission line is a fleeting asset. So it's there today. It will not be there in a year or two from now. So it's now or never. Now, here we are. And I want to wrap this up. And I want to talk about a few things that have been prompted to me in the context of this series, and also kind of what's going on in the ag market in 2023. It's always been a point of mine that we need to, as agricultural business people, need to be aware of risk and risk management. And it was interesting to me that the subject matter of this last Purdue seminar they put on in March was all about risk management and your farm operation. And we're going to get into this 2023 coming down to the goal line. And the people who did a good job on risk management are going to make a little money. And people who did a horrible job stand to potentially lose some money. And the risk management has a couple of dimensions to it. When you sell your crop, and secondarily, how do you lock in some sort of basis? And I'm not going to get any of that. They talk for hours about that in the various Purdue things. But my point is, we had a very kind of volatile and risky year, and I just want to put this in the perspective of solar, because I claim that if you're a farmer and you have a large farming operation and you've got 500 acres here and 300 acres there, 200 acres over there, if someone knocks on your door and says, can I put the acreage into solar use, you should say yes, because it provides a diversification source of income. And I'm just going to go kind of make one point. The standard tool of diversification in the financial markets is they write books about it. This is a very thick book. It's all about portfolio distribution. And then the particular book's called about the Kelly criterion. I can distill this entire book down to one phrase: be diversified. So here you are as a farmer, your diversification is, do I plant corn or do I plant soybean? Do I try to get some wheat in there somehow? And secondarily, your other dimension of diversification is just your asset value. Okay, I'm not really making much money doing this farming, $200 a year, $300 a year per acre, but my land's appreciating. I got it. I inherited for nothing. At the time I inherited, it was worth $2,500 an acre, It's worth $10,000 an acre now. So your business was all about capital appreciation. And there's really nothing wrong with that. But I'm going to make two comments. That land that's worth $10,000 an acre growing corn is worth $20,000 an acre with a solar plant on it. Point number one. And point number two, yes, you're diversified. You have this asset base, but it's wrong way risk. What do I mean by wrong way risk? If the price of corn goes down, if interest rates go up, if cap rates associated with real estate go down, your asset value is going down. So your asset value is correlated to your underlying business, the corn and soybean production. So I'm just going to share. I'm just going to share something. I'm going to tick through it. I'm going to make a few points. And what is this figure number one here? And I'll post this on my website, www.czinkley.com. Blue is the forward curve of corn. That is the price of corn today plus the futures market for corn in the future. What this says is the price of corn when everybody made the decision to plant corn or soybean and went and bought the fertilizer, et cetera, is really pretty high. And the expectation that it would be high at harvest time in December 2023 was also very high. A month ago, the price had fallen a bit. The forward expectation value had fallen pretty hard. But fundamentally, everybody was still making money. I go check this last night. It's really quite troubling because the current price, the prompt price, today's price, keeps dropping. That's really never a good thing. And secondly, the entire forward curve keeps dropping. And it's dropped to the point where I argue is pretty close to or below break-even prices. So this is my point about being diversified. So here's my pitch to go watch the Purdue presentation. These guys do a great job. Everybody should listen to those every month. This is my point about solar use and agricultural land. In that $10,000 an acre, part of that price assumes the land has another use. So that is to say that part of the reason why folks are buying that land is because they know if they buy 1,000 acres, 2,000 acres, that over a period of time, some percentage of that land will go from agricultural use to another use. It will go to a subdivision, it will go to building a factory on it, it will go to a strip mall, but some percentage of that land, it will go to a solar plant. Some percentage of that land will go to a bigger and higher use. So that's kind of priced in to the psychology of where the real estate price is for the land. And what this says is 55% of agricultural landowners in Indiana think that the reason why their land may appreciate is 55% due to these other non-ag uses. So my point here is when we put restrictions on land use, what you're saying is, okay, Mr. Landowner, I'm the government. I'm going to tell you can't put solar on your land. So, okay, you can't double the value of or triple the value of your income from that land. You can't do it. But it's even worse because they're telling you that they're devaluing your land. They're taking the option of using that land as a non-agricultural property away from you. Now, so that's really kind of creating a double failure to diversify because you don't get the solar income, but your underlying land isn't eligible for a solar project when otherwise it might be. I just have to go on a tangent because I hear all sorts of things when I say these things. Listen, less than 1% of U.S. farmland is eligible for solar. Okay, maybe it's 2%. I think it's less than 1%. It doesn't matter. It's a small number because fundamentally, again, the land is valued only under transmission lines and only under transmission lines that have room for the power. So understand preservation of farmland is an important public policy objective, but putting a couple thousand acres of land into solar use in a county is not going to change the character of the county from agriculture to any other. It's not going to change the characterization of the county from rural to any other. All you're doing is using your land in the most efficient way. And you can't have every corn stalk cannot turn into a solar panel because every corn stalk's not planted where there's a transmission line. So only a small percentage is. The other thing is, I hear this, well, we make food. Okay, no, you don't make food. The ag land that is growing corn is actually growing energy. There's 50% of that corn is used in ethanol already today. So the energy versus corn debate's 20 years old. And guess what? We decided to put corn land into growing energy. All that's done is make farmers more wealthy, and it has not caused a scarcity of food. Now, the ethanol use on a forward-looking basis is projected to go down. So, we kind of need to be thinking about how are we going to replace those acres of corn that are going to ethanol with something else. I claim that solar is the easy solution for that. So let's see if I got any other slides here. So break-even costs. Break-even costs. These are 5-year averages and 10-year averages, and this particular West Indiana case farm that Purdue uses is on pretty high productivity soil. So, take that into consideration. But break-even cost, according to Purdue, this year, $5.50 in Indiana on average productivity soil. And just go look at my other paper on the same subject. So let me just do some quick math. If the current price of corn is on the futures market for delivery in December is $5.06, for example, and the expected value is $5. We'll go into that in a second. That number is below break-even cost. Kind of add in some negative basis there. That is, you don't get the price that's on the Chicago Board of Trade. You have to take a little bit of a discount. And we've got a pretty scary, risky situation. My favorite website of all time is this University of Illinois probability tool, which is part of their farm doc tool. The links on this paper, I'll put the paper on my website. And what this says is the probability at harvest time of getting $5.50, let's just call that break-even cost with the basis in there, is only 30%. There's a 69% chance the price is going to be less than that. There's a 25% chance the price is going to be $4.40. I mean, that is a very troubling number. Okay. So my point of this whole story, now the fourth video, is if you're a landowner, you have the opportunity to put some of your land in a solar project, you probably should do it. I mean, that's not always true. There obviously are emotional things going on here. There's a lifestyle things going on here. But if you take land and it's worth $10,000 an acre now, and you make it worth $20,000, you can always sell it for $20,000 and buy 2 acres for $10,000 each. And if farming is what you want to do, you could double the size of your farming operation. Clearly, there are instances where these farms are kind of adjacent and appended to, which really kind of a hobby farm, or property that's in a rural area, um, farms that don't really grow these row crops, and the circumstances there could be entirely different. I'm really talking about New York, Pennsylvania, Virginia. Um, so there's definitely an emotional element to this. Fully understand that. I'm really talking about the business end of this. And if you're a policymaker in one of these towns or counties, you should encourage this, because you're not going to lose the rural character of your county. It's impossible. You're not going to have a solar plant. Every corn stalk's not going to turn into a solar panel. It's impossible. Your market penetration, I mean, I would be shocked if there was any county where it would be more than 10,000 acres. Shocked. And of course, usually it'd be 1,000 acres or 2,000 acres maximum. And that's just because of the power line, the physical constraints, right? It's nothing to do with policy. It's just due to the economics of the whole thing. So you really shouldn't be afraid of this. It's not going to overwhelm your town. I mean, you might want to keep the solar plant from being downtown or right on the edge of town. But what you're doing when you're telling your constituents you can't put a solar plant on your land is you're really asking them, you're removing a tool from them to manage risk in what is in reality a very risky business. And what's good for the farming? What's good for the farmer? What's good for farms? It's farms that are economically healthy. And this is a massive tool. I'm a farmer. I have 1,000 acres. I put 500 acres into a solar project. Wow. I don't have any more risk in my business anymore. That's not bad for farmers. It's not bad for farming. It's not bad for the farm community in that town. So that's kind of my punchline. And I do kind of build up into this in the previous video. So if you have any further interest in this, just go check out the other videos. And if not, I hope you have a good year in farm country. I'm going to keep watching this farm corn price issue. It's been very volatile. Maybe the volatility goes back your way, but my point is, you don't have to ride this roller coaster. Take some land, put in a solar use, get some current $1,000 an acre income in there, and it will change your business. And as a community, it will change your business too, because you're going to have economically healthy large landowners, and you're going to have the economics, of course, of the solar plant, which I guess someday I'll make a video on that too. Thanks for listening.